Welcome, everybody. Steven Sitkowski here. Welcome to this week's edition of Market Insights. It is September the 16th. Amazing. Heading into fall. Hope all of you had a great weekend. We check in on the markets. Want you to know that everything that we do here is for educational purposes only, not intended as investment advice. So what's moving the markets? Well, everything is kind of on pause for Wednesday's Fed decision. Let me kind of give you the latest and the greatest as of this recording. Markets fairly flat. Dow's up 0.44. S&P up 0.06, NASDAQ down 0.54. That's as of midday today. I don't really expect to see any big movement until we get the Fed decision. The Dow hits record high today. Kind of exciting, like all-time record high. Pretty cool. I remember watching an interview with Warren Buffett when he said, I remember when the Dow hit 100. Oh, goodness. Let's see. So it's gone from, this will let you know whether there's any money in the stock market, from 100 to 41,575. Apple shares down a bit. I guess weak demand for the iPhone 16. 10 years at 3.653, great for equities. And oil prices have creeped up above 70, but are still relatively inexpensive. What to watch this week? We had the Empire State Manufacturing Survey come out, and it actually beat expectations, so that was a positive. Tomorrow, we've got retail sales supposed to be down 0.3%. Home builder confidence, that's not a market mover, but retail sales could be. On Wednesday, of course, we have the big Fed announcement. That definitely could be a market mover. Thursday, we get initial jobless claims. We're expecting that to come in at 230,000. Fed manufacturing survey is expected to improve over last month, and our leading economic indicators come out also. So Thursday's kind of a big day. Wednesday, Thursday, then nothing scheduled on Friday. Market breadth for last week. Pretty solid, especially on the NYSE. 548 stocks hit new highs compared to 168 hitting new lows. On the NASDAQ, kind of split. 411 hit new highs, 393 hit new lows. Advancing volume well above declining volume. Last week's heat map had some big gainers. NVIDIA up 10%, Broadcom almost 16%, Microsoft 6.5%, Alphabet 6.25%, Amazon 5.51%, Tesla nearly 5%. You can see, with the exception of a couple little pockets, Adobe, some of the financials, including JP Morgan, energy. Other than that, everything else was pretty much up. Here's a 1 year heat map, whole lot of green, except Intel down 47%. That was your big loser, but it's been a great last 12 months. Terrific opportunity to make a whole lot of money if you knew what you were doing. 1 year sector returns, technology by a pretty good margin. So you've got the S&P up 26.46% over the last 12 months. Technology up about 42%. Communications 29, financials 29, industrials 25, REITs come on. 23, utilities 21, staples 19, healthcare 19. We start to get the drop off. Materials 14, discretionary 14, and energy is actually down 6% for the year. NASDAQ regained all of its losses. Look at that from the previous week. And the S&P had its best week this year, up about 4%. Income expectations. This was interesting. University of Michigan, they asked what people thought their income expectations were going to be over the next 1 to 2 years. They think their income is going to go down 0.5%. In addition, people asked, what do you think the likelihood is of a comfortable retirement? Look at where that has fallen, down to 50 some on this index. So we've come way down on that. On the other hand, consumer sentiment is up for the second consecutive month. So people overall seem to be feeling a little better about things. Market ups and downs. So you can see the year-to-date returns on the S&P and the NASDAQ. Index return from year-to-date lows. Index maximum drawdown, right? So the point is we've had a great year, even though we've had some drawdowns. It's just part of the deal. Average member or average stock on the NASDAQ, average stock has fallen 44%. But if you could have endured that, the NASDAQ's up 17%. So you're going to get bumps in the road. It's just part of the deal. And as long as you don't lose your mind, you're good. Fear greed index right now is at neutral. Last week it was at fear. So we're at least back to neutral. How it's not in the greed category is beyond me. Short-term rates, by the way, indicate a potential recession. Do I think we're going to have a recession? Not near term. We will at some point. You get recessions every 5 or 6 years on average. But no, the job market is still too good. Now the big debate. How much is the Fed going to cut on Wednesday? And right now, the odds are 57% that we get a 50 basis point cut, only 43% that we get a 25 basis point cut. I'm still in the 25 basis point camp. I just don't think the Fed wants to go too fast, too soon. And I think as such, they want to be more gradual, at least with the first rate cut, but I don't know. We'll see. How do markets react to a rate cut? Over the next 3 months, they tend to go up about, depending, mid-cap 3%. S&P, those are large cap 2%. And the Russell, which is small cap 1%. And over the next 12 months, 13, 10, and 5. Let's take a look at the charts. See what they've got for us. So we'll look at the S&P 500. So it is starting to, it looks like rounding off again. And look, can we get above these previous levels? That's what it's all going to come down to. If so, we could be off to the races. But it's like the last 2 times we've approached these levels, we've had a bit of a pullback. I like the fact that we're nicely above the 50-day moving average. And how about the Qs? They've gotten back above the 50-day, but they're threatening to drop below. Also notice, see this yellow line? That is the 50-day. Notice that it's sloping downward a bit, which is a little bearish. So, I mean, we're not in a bearish market for the Qs, but we're kind of at a pivotal point. It's got to make up its mind. Does it want to run or does it want to pull back? Still too early to tell. And the Russell 2000's been making a really nice move. There's that rounded bottom. Been pretty erratic this year. Generally, it is thought to, that the smaller cap companies do well when interest rates go down because they're greater borrowers of money on a percentage basis. Our 2024 track record for the first half of the year, we have closed 74 trades. Average return's been 18.9% in 19.2 days. Pretty good. About 1% per month. Now, past performance doesn't guarantee future results, but, we're off to a good start for our trade ideas of the week for this year. All right. Well, thanks for hanging with me. I will see you again next week. Until then, be safe, be blessed, and bye for now.